Hey, thanks for joining this episode of What's on My Mind today. We're doing a little bit of an amendment video. I recorded a video on insurance agents. It was very impassioned. It was a little bit of a rant. My friend Chris reached out and shared, hey, love the passion, but let's dial it back a little bit. And there's some things on that video kind of related to commissions, payouts, that it is true. I don't know the exact payouts to those agents who took advantage of those clients. But what I want to do today is kind of provide an update to that video. I'm still impassioned that you need to get a third-party review before you pull the trigger on those policies. But I want to make more of like an educational video of kind of what you should do to avoid that scenario. So the first thing I want to say is when you get pitched a series of policies or a grouping of policies and the total premium is $40,000 a year, the first thing that you'll want to do is just check your cash flow. Like, can you afford this, right? And can you afford this like for the next 10, 20, 30 years? Is this something, can you afford $40,000 a year of premium, out of your checking savings account? And just make sure if the policies total up to $40,000 of premium per year, that you're in a financial position that you can afford that. The second thing you want to do is ask the agent, and you've got to have confidence with this, but confidently ask, what is your payout grid? That you're just curious to know. The payout grid is going to tell you how much that agent will make off the sale of the policy. So let's say I'm a young agent just starting out, and my insurance agency or company is offering a 50% payout in that first year of the policies. That means if you are paying $40,000 in premiums, that agent who's selling you the policy, if their payout grid is 50%, they're making $20,000, or at least that's coming to their agency. They might have fees and expenses involved, but that's like the top line revenue. And so you want to ask this just to have a clear understanding of incentives. If it feels like the policies are really being pushed hard and the person sounds very convincing and they're just really like incredible salesmanship, and you just feel like, wow, I'm really being pressured into this. This could be why. So just asking, hey, what's the payout grid? I'm just curious. I know it doesn't come out of my checking account. I'm not paying you out of pocket. I'm paying you through the policy. But just out of curiosity sake, hey, what's your payout grid? I'd be curious. The longer they're with the company, the more successful, payout grids go up. So if the payout is like, let's say 80, or let's use a simple one, 75%, they're making $30,000 off that $40,000. Payout grids typically decline over time, but that first year payout grid can be helpful to just understand as a consumer, what are some of the incentives in the relationship, even though you'll be told that you're not paying this, there's no extra fee. What is built into the policy can be helpful to make an educated decision. And the last thing I would say is ask, do any of these policies that I'm about to purchase have what's called escalating premium? So escalating premium is, okay, it's $40,000 of premium this year, and maybe that doesn't sound like a lot to you. You're doing very well. You're making way in excess of that amount, but you want to ask, is this escalating premium? Meaning in 5 years, 10 years, like will the $40,000 go to 45, 50, 60,000 a year of premium? Is it an escalating premium over the years? And that will help you to decide, okay, maybe I can afford $40,000 now, but I don't really want to pay $50,000 in 5, 6, 7 years if I'm in an escalating premium policy. So these are some of the questions. Again, I want to thank Chris for calling this out, and I took the opportunity to make more of an educational video, a little bit longer, but please get that review from either a CPA, it could be a fee-only advisor, could be an hourly advisor, it could be a friend who used to work for one of these companies, but get a third party, get someone who doesn't have a payout grid involved in the decision, and then ultimately the whole purpose of this is for you to make wiser financial decisions, better financial decisions for you and your family. So thanks for tuning in today. I hope you enjoyed this kind of amendment video, and I appreciate you watching. I'll talk to you later.